If you want stable growth on your cash, access to it whenever you need it, loans on your terms, and income tax savings, you need to learn how to become your own banker. Let me show you how it works in under 3 minutes. A bank is essentially a middleman between people who have cash and don't need it right now and people who want cash but don't have it right now. So when people deposit money to a bank, the bank lends it out to people who want it. They charge big interest for those loans. Now they might pay little bits of that interest back to depositors, or they might not. But the difference between the interest that they charge on loans and the interest they pay to depositors is the revenue to a bank. With that money, they pay for their expenses, and what's left is profit. Profit that goes to the owners of the bank. So what would it look like to become your own banker? Well, it starts with a specially designed whole life insurance contract at a mutual company. Now, when you put money in, it's not a deposit, it's called a premium. But the insurance company loans the money out and they collect interest on those loans. Now, for that, they guarantee a cash value increase that over the life of the policy works out to something like 3 to 4% per year. Then the insurance company pays their expenses, and what's left is profit. But in this case, because it's a mutual company, you're a part owner and you get your share of the profit right back on top of the guaranteed cash value increase. And because technically this is life insurance, there's a death benefit. None of the growth on this is taxable, and there's other tax benefits, and the company is contractually obligated to loan you money with the cash value as collateral whenever you want it and on flexible terms.